In this discussion, we will discuss the discussion question of discuss the process for making an eliminate department type of decision. When thinking about a discussion question or essay question such as this, our goal is typically to expand on the discussion question or essay question, then being more likely to pick up that type of information that is being looked for the essay question, or expanding or contributing to the topic with relation to a discussion question, that typically being the goal. Keeping that in mind, let's go through this one more time. Discuss the process for making an eliminate department type of decision. So the first thing we might want to think about is, one, this is going to be a managerial accounting type decision versus a financial accounting type decision. In financial accounting, we're usually thinking about how to record something in relation with the rules for recording it, generally accepted accounting principles or some other accounting principle rule. Managerial accounting, we're thinking about the decision-making process for best practices. What's the best decision for the profitability, the well-being of the company? So this is going to be that type of decision, a managerial accounting type of decision. We have the eliminate department. Should we eliminate a department or not? Type of decision. This is going to be a common type of managerial accounting decision that could come up when we're considering an elimination of a department. Typically, we're thinking about a situation where we're saying, hey, we've done departmental income statements, and it's looking like if we have department, let's say A, B, and C, we look at department C, it's got a negative amount, a negative income amount that's being contributed to our total income for A, B, and C departments. So our departmental income C is negative. Well, that's not good. Why don't we just get rid of C, and then we'll have, more income? Our income should be higher then, because if we take a look at our three departments and combine the three departments together, and one department is negative, you would think that our income would then be the sum up the two positive compartment numbers, and we would be better off. And that's usually how this type of scenario or question would come up. And then we've got to think about, well, is that really true? If we were to remove department C, is it really true that our income would be increased by the net loss that department C is reporting here? And that's not always the case, and that's going to be the question that we're going to have to basically look into. We're going to have to look at once again, relevant costs, relevant revenue, and see what those will be. What will be those costs that are going to be relevant, or the cost that would change if we were to make a different decision to eliminate or to keep the departments? What would be the revenue items that would be the same or different? Now, when we eliminate a department, if we were to do so, obviously the revenue that department generates would go away. That would be pretty clear. So we probably wouldn't have the revenue. Maybe it would affect the revenue of other departments. We might want to consider that, but the revenue of the department would typically go away. On the cost sides, it's not so clear, because we'd have to actually go through the costs and look at those costs that are directly related to the department to see if they would be eliminated or not. So things like if someone worked directly for that department and they didn't work in any other department, and we had the ability to let them go without substantial costs to do so, then yeah, the workers, the salaries and whatnot, those would be eliminated typically. If we had any supplies specifically for that department, those type of costs may be eliminated. So the type of costs that we can apply directly to the department might be eliminated. But many costs, remember, those indirect costs when we make a departmental income statement, are actually allocated to the department and may not go away even if we were to eliminate the department. Why do we allocate it there if they don't go away? Because that's useful for some types of decision-making processes, because they do benefit from these costs, but they're not costs that will go away completely if we were to eliminate the department. So, for example, if all three departments were in the same building and we had to pay rent on it, and we can't cancel the lease or anything like that, if we got rid of C, we'd still be paying rent on the building. If we had maintenance on the building, that we were applying to Department C, well, we'd still have to pay at least some portion of the maintenance cost that we're applying out to Department C. And so any other kind of costs that we're applying out, we might have legal fees and whatnot that we pay for the entire company that we apply out to C, and those types of costs that we allocate over, there's a question as to whether or not they would be eliminated or not. And so those are going to be, if they're not going to be eliminated, we need to take them out. They're not relevant to the decision-making process. And therefore, even though they have a net operating loss, it might be the fact that if we eliminate the department, we would be worse off, given the fact that many of the costs that are included in what we see as a net loss on the Department C's departmental income statement are not actually costs that are going to be gone if we were to eliminate the department. So those are the types of things we have to put together. We got to put together, okay, what would be the what would basically be the income if we were to remove Department C. In order to do that, we have to think about the relevant costs, those costs that would change if we were to remove the department or not.